Welcome to this tutorial on how Dailypay affects your taxes. Dailypay is a financial service that allows you to access your earned wages before payday. But it can have implications for your taxes. In this guide, we will explain how Dailypay works, its tax implications, and provide best practices for managing your taxes when using Dailypay. First, let's understand how Dailypay works. Dailypay allows you to receive a portion of your earned wages before your scheduled payday, usually through a mobile app or online platform. The amount you can access is based on your earned wages, and you can choose to receive a portion of your pay as needed. Now, let's discuss the tax implications of using Dailypay. When you use Dailypay, the amount you receive is considered taxable income, just like your regular paycheck. This means that you will need to report the income on your tax return and pay any applicable taxes. However, Dailypay does not withhold taxes from the amount you receive, so you will need to set aside money for taxes or make estimated tax payments throughout the year. To illustrate this concept, let's consider an example. Suppose you earn $4,000 per month and use Dailypay to access $1,000 of your earned wages before payday. When you file your tax return, you will need to report the full $4,000 as income, including the $1,000 you received through Dailypay. You will also need to pay taxes on the full amount, which may result in a larger tax bill if you did not set aside enough money for taxes throughout the year. To manage your taxes effectively when using Dailypay, it's essential to follow best practices. First, set aside a portion of the amount you receive through Dailypay for taxes, usually 25 to 30% of the amount. This will help you avoid a large tax bill at the end of the year. Second, make estimated tax payments throughout the year to avoid penalties and interest. Finally, consult with a tax professional to ensure you are meeting your tax obligations and taking advantage of any available tax deductions and credits. In conclusion, Dailypay can be a useful financial tool for accessing your earned wages before payday. But it's essential to understand the tax implications and follow best practices for managing your taxes. By setting aside money for taxes, making estimated tax payments, and consulting with a tax professional, you can minimize your tax liability and avoid any potential penalties or interest. Remember to always prioritize your tax obligations and seek professional advice if you are unsure about how Dailypay affects your taxes.